Right, hello guys. Today we'll see the topic bank reconciliation statement. Right, okay, let me give an introduction on bank reconciliation statement, right? Right. Why do we prepare bank reconciliation statement? Right. We prepare bank reconciliation statement because the cash book balance which is maintained by our business may vary with the balances or the records which the banks have, right? That is, the cash book balance or the cash account balance will vary with the bank statement balance, right? There are some multiple reasons for the variations. We'll see it about later. Just I'll give you a general picture on bank reconciliation statement. Right? Bank reconciliation statement is prepared in order to show the differences in between the cash account and the bank reconciliation statement. Right? The first thing you have to keep on your mind is bank reconciliation statement is prepared in order to show the variations in between the cash account and the bank statement, right? We don't correct the amount, but we show the variation between the cash account and the bank reconciliation statement. That's the first point, right? Next, generally, what do we mean by bank overdraft? Bank overdraft. Bank overdraft is the facility given to current account holders. Bank overdraft is a facility given to current account holders, right? What do you mean by bank overdraft? Right? Bank overdraft is a short-term loan given by the bank to a business in order to meet its short-term liquidity problems. Example, the bank has a balance of 14,000 rupees. A respective customer has an account balance of 14,000 rupees, but he has to pay a payment of 15,000 rupees. In that particular situation, the customer, example, the business can draw a check stating that or directing the bank to pay 15,000 on behalf of the business. In that particular situation, the bank offers to this business 1,000 rupees additional fund. Even though he has 14,000, the bank pays the amount to the relevant person who gives the check to the counter, rupees 15,000, right? Now, what do you mean by bank overdraft? If they ask in the exam, you can say it like this: bank overdraft is a facility or the amount in excess that the current holder account can draw a check in order to meet the short-term liquidity problem or the short-term payment, right? This is about bank overdraft, right? Next, let me tell what are the variations. Why the cash account balance vary with the bank statement balance. Right, let me tell you. The first reason, unpresented checks. Right. First, unpresented checks. Number 2, unrealized checks. Number 3, bank errors. bank errors. Number 4, direct deposits. Number 5, standing order payments. Number 6, cash book errors. Number 6, cash book errors. Number 7, the final one, bank errors. Right. Let me explain each of these reasons. Number 1, we'll take unpresented checks. What do you mean by unpresented checks? Right. Example, now a business, or just think you are issuing a check to a person to whom you owe to pay an amount, right? Now you are issuing a check, right? That particular person has not presented the check to the bank to receive the particular amount stated on the check, right? Unpresented checks means the person who bears the check has not presented to the bank to receive the payment yet. That is meant by unpresented checks, right? Next, unrealized checks. What do you mean by unrealized checks? Right. Now, just think you have got a check. Or you have received a check, right? That particular check you have deposited in the bank. But the bank has not credited your account. That means they will credit your account in your accounting books. You will debit, right? The bank hasn't credited your account yet. The check you have deposited has not been credited to your account yet. That is meant by unrealized checks. Right. Next, bank error. This is generally this is not practical, since all banks have their systems automated and they have minimized their errors through automation. So bank errors is not a practical reason, right? We'll see what do you mean by bank error. Example, you deposit an amount worth of 10,000 rupees. In your books of accounts, you will be recording this 10,000 rupees as debit cash book, which column? Bank column, rupees 10,000, right? Then you will credit cash book, your general cash column, rupees 10,000, right? You will debit cash book bank column, credit cash book cash column, general column, rupees 10,000, right? The bank has to record it. If they are recording it in a proper manner, debit their cash account, and they have to credit respective customers account, right? They have to credit 10,000 cash account since they are receiving cash 10,000, and respective customers account 10,000, right? Instead recording 10,000, the bank has recorded rupees 1,000. We'll assume rupees 1,000, right? Then the bank statement is prepared as per the records the bank maintains. Then the bank statement also will show rupees 1,000, but actually we have deposited rupees 10,000. There's a variation of rupees 9,000. That also should be shown in the bank reconciliation statement, right? That is the meaning of bank error. Right. Next, direct deposit. Next, direct deposit. What do you mean by direct deposit? Right. I'll explain you. Right. Direct deposit means, example, for an example, you sell goods worth rupees 100. We'll take 100. Just for this example, to understand, we'll take rupees 100. You sell goods worth rupees 100 to Nimal on credit basis. This Nimal, the debtor of our business, directly deposits the amount he owes to our business to our bank account. This is direct deposit. This is direct deposit, right? This is direct deposit. Next, standing order payment. What do you mean by standing order payment? The meaning of standing order payment is, right, example, we have a bank account in commercial bank. Right? We have a bank account in commercial bank. Right? You are the account holder of your account. Now you go to the bank and instruct the bank to pay your annual subscription fee. You would have studied in non-profit organization. You are a member of a non-profit organization. Example, let us assume Red Cross. And you say, commercial bank, from my account, monthly you have to transfer rupees 10,000 monthly. You have to transfer rupees 10,000. Then the bank, as per your instruction, they will transfer rupees 10,000 to the Red Cross non-profit organization. This is the meaning of standing order payment. Right? Next, what do you mean by cash book errors? It is just similar to bank errors. In your accounting books, you make some errors. Instead, you have to record 10,000 where you have recorded rupees 1,000 only. Right? It is also somewhat similar to bank errors, as I explained you before. Right? Bank errors, I have stated number 3, but already again I have repeated it as number 7. Sorry. Right. When preparing bank reconciliation statement, we have to prepare two particular items, two particular components. That is, one is the adjusted cash account, and the next thing is the bank reconciliation statement, BRS. Next thing is the bank reconciliation statement. Right. Now I'll teach you all. We saw some multiple reasons for the variations of the cash account balance, that is the cash book balance, and the bank statement balance, right? Now I'll say all which reason should be adjusted where, that is adjusted cash account or bank reconciliation statement. Right. I told you all 6 reasons for the variations between the cash account balance and the bank statement balance. Under that, number one is what? Unpresented checks. Unpresented checks should be taken to bank reconciliation statement for adjustment. Unpresented checks. Number 2, unrealized checks, right? Unrealized checks also should be taken to bank reconciliation statement. Unrealized checks, right? Number 3, direct deposit, right? Direct deposit should be adjusted in cash account. direct deposit Direct deposit should be adjusted in the adjusted cash account, or should be adjusted in the cash account. Next, bank charges. The seventh one, I guess I wrote bank charges. Right? What do you mean by bank charges? Right? What do you mean by bank charges? Bank charges. Right. The meaning of bank charges is, example, the bank is also a business, right? The bank won't provide us social service, right? For their services, they will be charging an amount as their fee. Example, they will provide us checkbooks. They won't provide checkbooks free of charge. For that particular checkbook, they will be deducting the respective amount from our bank account. Those types of charges will be included under bank charges. Example, you are obtaining an ATM card. Right? Generally debit card. For that particular card, the bank will deduct the amount directly from your account. Right? Those types of charges are also known as bank charges. Right? Bank charges. Next, standing order payment. Standing order payment is also adjusted in the cash account. It is taken to adjusted cash account. What? Standing order. Right. Next, errors. Errors are of two types: bank errors and cash book errors. Right. Bank errors should be taken to bank reconciliation statement. Bank errors. Cash book errors should be adjusted in the cash account. What? Cash book errors. Right, okay. Right, okay. Now we'll move to the final heading. Layout of bank reconciliation statement. Right, okay. Example I'll take. Vivid future. Bank reconciliation statement for the month ended 31st March 2021, right? Balance as per adjusted cash account. Right. If you start with the balance as per adjusted cash account, keep in mind you have to add unpresented checks. There may be multiple checks. Example, check 1, check 2, check 3, and so on. Right? And you have to deduct unrealized checks. You have to deduct unrealized check. There also you may have check 1, check 2. Right? Then you have to take the total here and you have to deduct unrealized checks. Then you will derive at balance as per bank statement. Balance as per bank statement. Or else you can do it like this. If you start with balance as per bank statement, you have to add unrealized checks. You have to add unrealized checks and you have to deduct unpresented checks. Then you will derive at balance as per adjusted cash account. You can do any of both the ways, right? You can select your own way, right? You can be your own boss, right? Okay. We'll cover the questions in our second video. Stay joined with us.